Good morning, afternoon or evening, ladies and gentlemen. Welcome back on this terrific Tuesday for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And I'm going to start by asking you guys a question. Now, we all know of the snowballing problem that governments have in regards to spending and running up the deficit and thus the debt burden that is levied upon all of us through their reckless spending. And everybody, at least when you ask them on the surface, would like to see that spending undone. They'd like to see a reduction in it. But would they really? Because actually, if you think about government spending, that is directly increasing the money supply, which if you're in assets, is actually working for you, not against you. This is why the rich continue to get rich and the poor continue to get poor, because rich own assets and poor people don't. So if you're an asset investor, do you really want the government and an agency like Doge to come and start cutting spending? We're going to be looking at a clip of Elon Musk talking about how he believes they're going to save $1 trillion in government spending, and right now they're doing $4 billion a day. We're going to talk about Larry Fink's predictions in regards to Trump's nationalistic policies and how he believes inflation is going to be increased over the next few months. But ultimately thinks the whole thing is very negative. People have gone from loving Trump to hating him. And then we're going to relate all this to the markets right now, because what the markets are suffering from right now is uncertainty. We've had some bad data, or data that is showing a weakening economy. Jerome Powell on his Yahoo Finance talk essentially said that's what monetary policy is supposed to do right now, because it was put in place to fight inflation. And to fight inflation, it looked to weaken sort of purchasing or to restrict the flow of money. There's an undoing of that that's yet to take place. Yesterday, we looked at the European stock market, which is soaring. And there is absolutely a correlation there between them lowering interest rates and that taking place. We're yet to see that in the US. So we're going through all of this because it's very relatable and relevant to the cryptocurrency market, which is selling off simply due to the uncertainty that's plaguing broader markets. And we'll show you all that. We'll relate it. It's still absolutely my opinion. We're still long and strong this market. And I think Bitcoin will recover and continue in the uptrend that it's in. I think more people lose money trying to call tops than anything. And I think the altcoin market actually isn't really in too much of a bad place. It's just very volatile. You know, when something's basing, it can fluctuate, can go up 200%, down 60%. And it just basically drains retail. And that's why a channel like this is, you know, really valuable. And if you want to take it a step forward, do become a Patreon. You know, sometimes the Patreon members have kept me going. But we don't need an excuse to be in this market. We ultimately believe it's going to fundamentally change the world, and there's amazing opportunities to come out of it. We're also going to look at some news in regards to what the EU is saying about Trump's support for crypto could harm Europe's monetary sovereignty and financial stability. And of course, they're unveiling a CBDC that's set to hit you in October. Christian Lagarde said that yesterday. They said they've been working on it for years whilst telling you that blockchain is a scam. And then there's some other stuff coming out of Trump's administration, executive orders being signed. And then we'll talk about what potentially could turn these markets around in the short term, which is the CPI print coming out on Wednesday. I think you're going to get a lower CPI print. And that's with worsening data that we've seen. That's going to, I think, increase the probabilities of cuts. I think the Fed are going to do a lot more cuts. And they're getting the excuse for it right now. And ultimately, I think that's going to correlate with markets having a good time. Let's kick things off with Larry Fink. I was going to say something else there. In regards to the second part of his second name. Let's kick things off with Larry Fink and what he has to say about Trump's nationalistic approach and kind of, I think, nationalism in regards to somebody being for their country has very much been tarnished. But ask yourself this question as well. We're always hypocrites as human beings. As a citizen of whatever country, do you want the government of that country to be for that country and ultimately put their wants and needs first? Very interesting. Let's dive into this clip of Larry Fink.
All are becoming a little more nationalistic, and I'm not saying that's a bad thing, but it does resonate with me that it's going to have elevated inflation. When I go to Washington, when they talk about these policies, I ask, at what cost are you willing to tolerate that? Yes, we may have more opportunities to create better and more robust jobs, But then the offside of that will be, it will create probably a little more elevated inflation in the short run.
Interesting comments there. Jerome Powell has spoke about that as well, and obviously they're talking about tariffs. I actually think, I've been short crude oil for a while now. I think that's going to nearly half, and I think that has everything to do with their monetary policies. And this is the question that I asked you at the start. Do people really want cuts to spending? Because really what's been happening, certainly under the Bidenomics, is they've basically just been increasing deficits, spending to prop everything up. And through doing that, basically inflated the stock market. If you want to build something real, there are kind of teething problems or a detox from the prior Bidenomics that's set to take place. We're going to play that clip of Scott Bessent once more, because this is sort of macroeconomic stuff and political stuff, but actually exceptionally relevant to the cryptocurrency space, which is kind of a victim, if you will, of the broader things going on. Let's look at what Elon Musk has to say and just think about the ramifications of $1 trillion less being sort of spent. And in this case, issued and spent. And is that good for the markets? Is that not? Let's dive into this, because what their plan ultimately is, in my opinion, is to bring in private to do what the public sector's been doing, to bring in private investments from and create a kind of more real economy that's actually efficiently driven and increases productivity via those measures than actually just essentially propping it up with government spending. They're doing the opposite, and there's going to be a fallout of that, or a kind of a bumpy period that we're seeing echo its way through the stock market and thus the cryptocurrency space. Let's dive into what Elon Musk has to say.
Just here trying to make government more efficient, eliminate waste and fraud, and so far we're making good progress, actually. So our savings at this point exceed $4 billion a day. Mm-hmm. So it's very significant.
You think you'll wind up getting to $1 trillion?
Yeah.
Of savings?
I mean, unless we're stopped, we will get to $1 trillion of savings.
And that stuff can be translated. I mean, we've been talking, we had Russell Vogt, the OMB director, on earlier, through very rescission authority, impoundment authority. But I believe you said it earlier, it's an audit that will not gather dust on shelves. This is actually going to wind up with real savings, bend the spending baseline down.
Yeah.
People want that. Truly. Yes, we all say we do. But if you're an asset investor, actually you want the government to spend loads of money and to keep inflating the monetary supply and to keep increasing the debt, because you're ultimately in things that are essentially a hedge against that. Now, that's rather selfish, because it ultimately believes in this, or leads to this kind of collapse eventually. And I'm very much against now, and I came from the opposite side, being an early Bitcoiner, this idea of a dollar collapse. If the dollar collapses, forget your assets. You know, the world is in a very apocalyptic place. I don't think the dollar's going to collapse. I think what they're going to do is use stable coins to sort of usher us onto a new system and kind of do some magic tricks and things like that with it. I don't think this big collapse is going to happen anytime soon, personally. We're going to have bumps in the road, and I think this is just one. This is just such an important clip, because Scott Bessent, of course, is the Treasury Secretary. Let's play this clip once again of him, and then we'll finish things off with some charts and a little bit of related news to the cryptocurrency space.
10% of Americans are 40 or 50% of consumption, and that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down, and could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
That clip literally on the past 3 daily market updates, because it really is just, and we'll maybe kick things off with the S&P, exactly what's going on right now. And people are trying to sort of price all this in, work all this out. And ultimately, one thing I can tell you for certain the markets don't like is uncertainty. We've still got monetary policy being very restrictive right now. You can see the S&P kind of throwing it down a little bit. It has done things like this previously. I would expect to see some support coming in and around here, or I'd certainly like to see it. I think people are worried that this is now the crack, like, you know, this is the start of something deeper. I'm on the alternative camp. I think where do people put their money? You know, and I think right now people already have a lot of cash on the sidelines in regards to the yields that are being offered by money market funds. But there are a lot of stocks out there that are getting hit very harshly. Tesla, you know, since we called it long, we got very close to our target. We didn't quite make it, but this has really thrown it down. I wouldn't like to see it sort of run the 180s. But I ultimately think we are going to see continuation for the stock market. You know, this does look very toppy. We need to really see that strength come in. Is this just a short-term range that we're sort of diverging below, and then we see continuation on the back end of once we've resolved all of that? I think for Bitcoin, I can absolutely see the merit for it going a little bit lower. The CME gap, I think, officially got closed yesterday. Everyone was saying, oh, the CME gap's closed. For me, the CME gap close, by the way, and look at that wick that came off of it, is when the CME gap closes, not when it just runs into it like all these ding-dongs. It's amazing the caliber of technical analysis on Twitter. This gap has now been closed. So are you going to see that sort of return? And actually, I think it even gapped on the way down. Yes, it did. So I think you're likely going to see this sort of gap close here. Then does it continue to the broader downside? We'll see. There is merit for Bitcoin, in my opinion, coming to 70k on the short term, but I'm not a fan of short-term patterns. This is a bit of a symmetrical triangle in and around the sort of previous support, potentially now flipped into resistance. You know, this might run you to your sort of 70k region, which would also tie in with being a retest of your sort of all-time high price action after making the initial bull flag target. It could turn around then. For me, I'm really waiting for some strength to come in. Ultimately, I'm optimistic on this industry, but more broadly optimistic on... I don't see that recessionary scenario personally. And I think this is going to turn out to be continuation. It's just a bump in the road. I think one thing I'm looking forward to this week, of course, is what's taking place on Wednesday, which is CPI. Inflation has been uptrending recently. I know trueflation, you know, it's not massive, and you're going to have fluctuations, but I know trueflation came down significantly. I think you're going to get a lower than expected print on Wednesday. That could fuel the market somewhat, certainly in regards to the prospect of future interest rate cuts. Let's talk about what the ECB said yesterday. This is from Cameron Winklevoss. I like the Winklevoss twins, by the way. Justin, European Union claims President Trump's support for crypto could harm Europe's monetary sovereignty and financial stability. What they're talking about is the US dollar and them using it to reign supreme. They're not talking about your altcoins. They're talking about how they're going to essentially export US dollars and US treasuries to the world through stablecoins. They also announced their CBDC coming this October. Also, this is new from Eleanor Tourette. She is saying the Trump administration apparently is preparing to sign an executive order that could rescind certain Federal Reserve policies that have prevented crypto banks from accessing so-called master accounts. Ooh, getting ready to directly streamline them into those treasuries and the Fed themselves, so that actually the stablecoins are essentially effectively CBDCs because they're backed by central bank issued debt, and they'll have accounts with them. Et cetera, et cetera. This would be a big deal for crypto native banks like Custodian Bank and Caitlin Long, who are currently fighting the Federal Reserve in court over the issue. And there's been a lot of sort of syndication. Generally, guys, I think there's so many bullish things happening for the cryptocurrency space. People just throw all that out of the window because of broader price action. And I've seen some horror stories on Twitter. Now, I can honestly say we're still up on our portfolio, but it's really because of 4 coins that make up about 70% of my portfolio. HBAR, of course, is one. We talk about it all the time. Yeah, we've given back some of the progress that we made, but I can't time every local top and bottom in what is a broader uptrend. I think HBAR is going to multiple dollars. I think there's many cryptos out there that we're holding that are going to do well. But some of the horror stories I'm seeing, I think one thing this pullback is even making me question. I have smaller altcoins that are just getting killed. Luckily, they're not a large part of my portfolio, and that's for a reason. You really think about what you're holding. There is, in the future, going to be a cycle that's driven more on usage and utility. And I think there'll be a general effect of everything rising at once. But there are things that are going to just do insanely well based on usage and utility and real-world application. And they're the ones you want to be in. Guys, I've rambled on for long enough. That's it from me. I'm going to love and leave you. Have a wonderful day, and I'll see you all in the next one.